In here, creator of the conventional financing real estate investment calculator, as well as many other real estate investing calculators and tools to help you on your journey to financial independence. So today what we're going to do is we're going to underwrite a property that I just found on Columbus, Ohio, just to show you how you can underwrite a deal fairly quickly if your intentions are to buy it using a new conventional loan. So real quickly, we have the property here. All I'm going to do is take the address, I'm going to copy that, throw it in here. I already added it's 3x1, 1308 square feet. Perfect. Now for rent. So I'm going to show you how to estimate rent, but you'll also be able to. One good pro tip is that you go and look at if it was rented before, try to see what it was rented for and how quickly it rented. So it looks like in 2015 it was listed for rent at 800. Within the same month it was removed, so that means it was more likely rented. In 2022, 1300. Within a month it was removed, and then in May of 2023, 1300, and then within 10 days it was removed. So it looks like 1300 is a reasonable rent estimate based off just looking at previous history, especially because rents don't drastically change. It took several years. I mean, this is a big increase for the rent increase, but that's a huge shift in time from 2015 to 2022, especially given everything that's gone on with the economy. So this gives you a rough idea what this property could rent for. So it's 1300 is what it's historically been rented for. And then we can use tools like Rentometer. So all we're going to do is we're going to type in the address. Actually, I already have it copied, so I'll just paste it. We're going to say we think it's worth 1300. It's a 3-bed, 1-bath property, and we'll let it do the rest. So once we submit the info, it will show you the results based on 22 3-bedroom single bath rentals seen in the last 12 months and 0.75 mile radius. So there's a lot here that we see, and what it shows is the average rent is $13.14, which is both skewed heavily if there's some that are significantly lower, significantly higher. So I care more about the median, right? What's in the middle, and it says $13.48. So in my opinion, market rent at this time is around $13.50. But when I make an offer to a seller, I want to make it based on what it's currently renting for, not what it could rent for. And then, so here's our subject property in orange. You can see all around, to the best of my understanding, greens are those that might be lower in rent, red are higher in rent, and then blue is similar in rent. So you can see around this area, for the most part, it's fairly consistent around that range. And you'll see that there's not, there's a few $100s below and a few $100s above between the 25th and 75th percentile. So this is a pretty good estimation right near the middle of that. So that's what I'll put there. When looking at this property, we see the current list price is $163,000. I added that. We're going to do a 25% deposit for a conventional loan. So the remainder is the loan amount, $120,250. Interest rates are around 7% right now. And this will just be a normal 30-year term. So next we will start estimating some of the expenses. So one of the main ones is going to be, so we already have our loan. We already have our loan here, our loan amount. Our taxes and insurance is what's next. So let's use tools available to estimate rent. So we are using V-Home Insurance, hyperlinked here, just to estimate the insurance. So we're going to go by location. We're going to go to, this is Ohio. Where's my O's at? And then it's going to say for properties between, and what did we say? This is 163, 150 to 174. You can approximate around $696 for insurance costs. And since this is right in the middle, I'm going to assume this is a fairly accurate amount, at least for now. When you're doing your quick analysis, you're going to want to make sure that the numbers are close to as accurate as possible. But once you decide to move forward with the property, that's when you want to get actual insurance quotes and renovation quotes and all those things to make sure that, you're getting as accurate of a picture as possible. So let's go 696 for the year here. Let's do taxes. So one thing you can do is look at, oh yeah, it even says here in the listing, properties occupied $1,300 a month. So that's good. That further confirms that that's what it could rent for. We know on the upside, maybe 1350, but there's not a huge gap between the two. So property taxes, under purchase price, typically you'll see what the tax assessment was and how much was paid. Looks like the value of this home is assessed significant, like very, very, very low. It really depends on the county, how they decide to assess the county. It really depends on the county itself that the property is in and how they assess taxes there. But we can quickly see, okay. So that I like to use is Smart Asset to estimate property taxes. You definitely want to confirm this information with the county website as well. But let's get this going. So the location is, where is Columbus? 43204. Property value. So the assessed home value, just put the value of the property, which is, you said 169, I believe, or 163. So it looks like taxes will be right around $3,000 a year. So 2967. Obviously, this is just to help you with initial underwriting. You're going to want to get more detailed. And because this is a single family home, I mean, we can see what the landlords are offering at $1,300 currently, but I'm assuming so I'm assuming they're not covering any of the utilities for the tenant. So let's put no utilities. You're going to have your property management. Even if you're going to self-manage, you want to account for property management costs for when you no longer are actively managing the property. Your vacancy at 8% and your maintenance and CapEx at 10% are standard rule of thumb. And so after we have our expenses, the final piece that we need to review is our entry cost before we can analyze. So our entry is going to include the down payment, agent commissions, assuming you're going to pay half, closing costs, assuming you're going to pay half, and then any renovations that we need for this one, and then any additional costs. So I have an inspection for $500 plus a few months of reserves. For rehab, we're going to leave it as is for the time being, although we do know that this property will need to get cleaned out a bit and renovated, but for the time being, we'll just leave it as is. And so this property, when we look at the analysis, income is $1,300, subtract away your expenses, your property management, and the reserves you set aside for maintenance, CapEx, and vacancy, and you're left over with minus $183 each month when you account for your reserves. And so your cash on cash return is your cash flow times 12, so your annual cash flow divided by your entry cost of $52,756 to get into the property. What this is showing you, obviously, if you're not generating cash flow, you've invested money, you're going to lose even more money each month. It's not a great investment. And even if you don't account for the reserves and you just say, you know what, I'm going to assume I don't have zero vacancy, no maintenance, no CapEx, you're still only cash flowing $51 a month. So your cash on cash return, assuming no reserves, is 1.17. That's way too low. I like a deal with everything accounted for closer to 10% cash on cash return. And then without reserves, I like to see closer to 20%. So doesn't mean you should give up. It just doesn't mean it's a deal at this price. So what we can do is look at this portion of the calculator, which shows you at what price could this become a deal. And what you're really going to see is that there's no real great avenue to make this one a great long-term rental. You would need a 25% reduction in price just to get positive cash flow. And a lot of that is because your fixed expenses are so high compared to your rent. There just isn't enough wiggle room, enough profit. There's not much you can do, even if you reduce the purchase price, which is going to reduce your monthly payment. It doesn't make a huge difference in this scenario. So it would take a 40% price reduction. So they're looking for 163. You offer 97,800 just to be able to cash flow $143 a month and get a 5% cash on cash return. So there's no real purchase price that you're going to get this at that makes sense. Additionally, what you have here is if you were to somehow reduce this interest rate, typically it's going to come because you're going to pay down, you're going to pay points to reduce your interest rate, or you can have the seller, offer that as part of closing. it would take a massive reduction. I mean, down to 3%, which is not very likely starting at 7% interest rate, especially in this market. So this really doesn't work either, but it would take all the way down to 3% interest rate for this to even be a viable deal from a cash flow perspective. And it still isn't a great deal from a cash on cash return perspective. So honestly, what this means is this is a hard pass as a long-term rental. Then it's up to you to determine, do you want to rent it out with a different strategy? I personally wouldn't recommend it for this type of property. So that is how you can fairly quickly underwrite a property that you just found on Zillow and gather enough information on the income and expenses, as well as the taxes and insurance, to get a good estimation. Is the deal that you should try to further negotiate or work on, or is this a pass? So thank you. Please make sure to stay connected with me on Instagram and YouTube. Instagram, it's Michael M N A T. YouTube is Intentional Investor. Thank you.